Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we get started, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today's guest is the editor of Silver Stock Investor and the author of this book right here, The Great Silver Bull, which he was so gracious to send to me here all the way to Croatia. Mr. Peter Krauth, welcome to Commodity Culture.
Thanks for having me, Jesse. I certainly look forward to our chat.
Great. So I want to start off with your own journey into investing. When and how did you get started, and what ultimately led you to the precious metal space?
So I did an MBA. I completed an MBA back in 2001, specializing in finance. And just as a little sort of side note, kind of looking back, I never once heard a word about gold, much less silver, all that time. 2 years, talking about finance and how to build a portfolio, how to manage portfolios, and evaluate investments. And so after that, I became a portfolio advisor in the mutual funds industry. And I noticed that some funds in the precious metals space were doing exceptionally well. This was sort of early to mid 2000s. And so I'd gone to the admin of the company I was working with, and they have a back office that looks at different funds and so on. And I said, "There's this gold and silver fund that isn't offered, that isn't approved by your back office. This is something I'd like to be able to offer to clients." And this is actually, you your viewers may or may not know, but the Millennium Bullion Fund. It's run by Nick Barashif of the BMG Group. Outstanding guy and outstanding organization. But and I'm reading his book actually right now, $10,000 Gold, which he wrote back in, I think, 2013. In any case, I didn't know Nick or any of that at the time, but knew of the fund and asked if they would get it approved. And so a couple of weeks later, they said, no, it's too risky. And I remember thinking to myself, how ridiculous. Gold and silver. And you can, if the objection is because of, let's say, volatility or something, you can adjust for those things by, position sizing and making sure that the client only has perhaps a smaller exposure, if that's the concern, because you're not going to tell me tech stocks are not volatile and or risky. And so it just made no sense to me. And I started sort of digging further and further into that space, becoming more interested, and actually subscribed to some newsletters, and sort of went down that rabbit hole, I guess.
Awesome. Well, before we dive into the specifics of silver, which I want to get into today, I want to start with a broader question, and that is, what has you bullish on silver right now as we sit here today?
Silver is really incredibly mispriced. I mean, if you look at what happened versus other metals back from 1980, it's the only major metal, even if you look at some specialty metals and right across the board, that is below its 1980 high. Gold, base metals, platinum group metals, some of the rare earth metals, they're all way above their 1980 highs. Silver is the only one that's, in fact, less than half of its 1980 high. That's one measure. If you look at inflation adjusted prices, still silver is something like 90% below its 1980 high. It's just a very, very bullish setup. And then, we can get into things like industrial and investment demand, but silver really is very much unlike any other metal. If you look at the fact that it's both monetary and industrial, it's about 50-50. And I think both of these sides of silver demand are going to explode in the next few years. So there are just so many huge drivers for silver going forward.
In your book, you note a lot of characteristics that make silver more attractive than gold. And one of the main factors is, of course, gold tends to sit around in vaults, etc. People hold on to it after being mined. It has a very small amount of industrial applications, whereas silver, as you mentioned, 50% approximately is industrial use, and so it becomes depleted more quickly. Could you break that concept down for us and list any other factors that make silver, don't want to say better, but maybe more attractive in certain ways?
Sure. So it's about 55% of the silver demand is industrial. And so the balance 45 is what I consider some sort of investment. So it's things like actual investment, people buying physical silver to hold, things like jewelry, silverware. And so if you add those together, in my view, as I say, they're kind of some form of investment. So it's about 50-50 roughly overall, industrial and investment demand. And so half of the silver supply every year is consumed. If you consider that half of it goes to industrial. It's true that so there's about 1 billion ounces of supply every year, just roughly, of silver supply, and about 15 to 20% of that comes from recycling. So naturally, some of the industrial demand or use does come back into the supply. But a really interesting note about silver is that only about 28% of silver supply comes from what we call primary silver mines. The rest comes from mining other metals, it comes from mining gold, copper, lead, and zinc. And so silver is highly dependent on the production of those other metals. And if you get perhaps some kind of a slowdown or slow down or not, silver, a lot of, as I say, about more than 2/3 of silver supply depends on those other metals. So um, if the price of silver goes up, demand for silver goes up. Unless the production of those other metals goes up at the same time, you're not going to get more supply, or at least limited, since, as I say, about 28% comes from primary silver mines. And besides that, I mean, silver is also the most conductive metal. That means that it conducts electricity better than any other metal. It's actually, that's measured on a scale up to 100, and silver is the standard. Silver is the 100. Copper is, I think, a little bit below at 95 or 97. Gold is, I think, a little bit below that. And it's also the most reflective. It reflects 95% of light. It's the single most reflective substance. And if you look at what's happening on the demand side, I think really you can't deny that solar over the next years and decades is going to be a huge driver for silver. The fact that it's highly reflective and conductive has a lot to do with silver being used in solar panels. But right now, of overall demand, silver is 12%. And if you look at overall industrial demand, it's more than 20% of all industrial demand goes only to solar. And so this big green energy shift, I think, is going to probably at the very least double silver demand over the next 8 to 10 years. And you've got all sorts of other, projections. The International Energy Agency saying that output from solar is going to be something like nearly 9 times what it is today, just in the next 8 years. And then you've got the Inflation Reduction Act in the US that is very, very bullish for silver. Something like $320 billion over the next 10 years is going to go towards solar. And then you have technologies in solar panels where the next technology is supposed to require about 50% more silver, and the technology to follow on that, something like 150% more silver per panel. So it's really a very, very bullish outlook.
You also write about something in the book called financial repression. Can you explain what this term means and how silver can help protect against it?
So actually, that's, I think, a very, very important concept for viewers. As you say, I talk about that in the book, and that's certainly one good reason to pick up the book and understand really what's going on. And that is that it's a simple concept, but an important one. It's where central banks and central planners intentionally keep interest rates relatively low while inflation runs higher than interest rates. And I have a chart in the book that shows 5,000 years of interest rates. And, when we had rates near zero, and this only goes back past decade or so, and for an extended period, multiple years of rates near zero, those were the lowest rates in 5,000 years of history. And so really, we are in uncharted waters. It's true that rates are rising right now, but if you look at, for example, in the US, rates somewhere around 3% that the Fed is setting versus the inflation rate closer to 8%. And those are just official rates. If you go to non-official rates, are probably more than double that, closer to 16, 17%. It's easy to see that rates are very, very much below the inflation rate. And that's not by accident. By having central planners keep interest rates well below inflation rates, um, there's a huge loss to purchasing power. But at the same time, it helps governments with huge debts to be able to repay those debts over time with depreciated dollars. So it makes the debt manageable in that sense. So that's what I call financial repression. And silver's been a great hedge against financial repression and against inflation over millennia. It was the first truly international currency. It's always been an inflation hedge since then. If you look back, I did the math. I went back and looked at the last 100 years, for example. 1922, silver sold for 60 cents an ounce. And if you use the official rate of inflation, just over 3%, let's say average annually per year since then, silver should be at about $11 an ounce. And today we're at just under 20. So silver has more than doubled official inflation rates, and probably is a lot closer to a fair return on what is real inflation. So over time, it certainly really does retain its value.
So you've predicted that silver will hit $300 an ounce over the next few years. And as we sit here recording this video, as you recently mentioned the silver price, a lot of people are disheartened. It seems to be taking a beating. Although I will say silver stackers and gold stackers to some extent seem to be some of the more impatient people sometimes when it comes to comments on YouTube. And I've heard this story 100 times, silver's not going up. So could you lay out your thesis for $300 silver in the years ahead?
Yes, absolutely. So central banks, they're going to be, I'm going to say, unable and or unwilling to fight inflation, to really truly fight inflation. Because if you were going to fight inflation right now, effectively, you'd have to have rates up near 8% or above 8%. So we're a long way from that. There's a huge gap. We're less than halfway there. And, the Fed is talking about really only raising rates to maybe 4.5%. It's true that inflation may come down. But I think that, Powell has mentioned their big concern. It's no different in Europe, for example. Lagarde has recently said, they've both said their main concern is that consumers will start to anchor their expectations around high inflation rates. And what that would do is that would have businesses start to factor in higher inflation rates and act accordingly, so that businesses may slow down, will do less hiring. People will either do less consuming and or in some ways more consuming of certain things that are not things that will not perish, for example. And you may try to get a jump on inflation and stock up on certain things, or maybe buy a car or appliances or things like that in advance of expecting even higher prices. So that's really one of the things that the Fed is concerned about, because that could really spiral out of control for them. And that's that wage price spiral that they're concerned about. People will start to ask for higher wages as a consequence as well. So if you look at what is happening with commodity prices, well, the reason that I think we're going to see silver really play out with much, much higher price levels over time is that commodity prices will continue to rise. There's no question that we're going to remain in what we call a negative real inflation, a negative real rate environment. So inflation, despite central banks talking about and raising rates, net rates are going to stay below zero, and that's going to help keep commodity prices buoyed and eventually rising. I think we're in a new secular commodity bull market. And that's going to eventually get people to lose faith in currencies when they see that for an extended period, their money just simply buys them less and less and less in a more obvious way every year. It's one thing to deal with 2%, 3%. When you're dealing with 7 or 8%, it takes something like 8 years or so before you lose half of your buying power. And so, precious metals have always been a hedge against inflation. People are going to return to it in a big way when they see that this is the one sector that has been outperforming. And, stocks and bonds have really taken it on the chin since the start of the year. Both are down dramatically. I don't think either sector, either of those sectors, the 60-40 portfolio, I think is finished, and neither of those is done falling. And commodities and precious metals in particular are going to hold up well. So the general investor is going to clue into that. They're going to start flocking to that sector as a hedge. And if we look at my long-term target for silver is that it could reach as high as $300 in some sort of especially in a speculative mania. And I get there different ways. So, and I detail these in the book. One of them is if I look at the gold to silver ratio, and the ratio bottomed at 15 in 1980. I think the ratio is going to get at least close to that at the peak of this this current bull. And if to get that ratio, you have to divide gold by the silver price to tell you how many ounces of silver it takes to buy an ounce of gold. And so my longer term view, conservative view of the gold price is that it'll reach about $5,000. You have some very highly regarded analysts that think it'll easily reach as much as 10,000. But if we go with 5 and the ratio drops back down to 15 to 1, so 15 ounces of silver to 1 ounce of gold, as it did in 1980, then that would mean a $5,000 gold price at a ratio of 15 would mean $333 silver. And so, you could, as I say, some think gold will go up to 10,000. In fact, I'm starting to lean that way myself a lot more in the last while. And so even 10,000 at a higher ratio of 30 to 1 would still get you to $333 silver. And there are several ratios that I use and that I examine in the book. Just one other one is the average U.S. home price to silver. So the number of ounces of silver it takes to buy the average U.S. home. In 1980, that was about 1,460 ounces of silver. And if you take the average home price today, which is say about $450,000 US, and you divide that by, you round up to 1,500 ounces of silver, you get again $300 silver. So I go through these. There are about 4 or 5 different methods that I look at to forecast a silver price. And when I started doing that research, they all ended up pointing to somewhere around $300. And so that target to me started to take on more importance. And when you're forecasting, sometimes I laugh at some financial forecasts. I see interest rates are going to peak at 4.7% or GDP is going to be 1.2%. I just think, being that specific is laughable. And so, $300 silver is as good a target, I think, as any, at least in my case.
So you write not only about holding silver bullion, but also about investing in silver mining stocks and ETFs. So I want to start with the miners. What are some of the qualities you look for in a good silver mining company? And then conversely, what are some red flags that make you maybe hesitate?
Sure. So I'm going to say I have 3 of my high level filters are management, grade, and jurisdiction. And so when it comes to management, I look for previous successes. It doesn't matter whether, this is a developer, a miner, or an explorer. In each case, I look for management that has prior successes. If it's an actual miner, then I want to see access, that they have the ability to access or have at least already top talent managing the company. They have to be able to raise money relatively easily. They have to have experience doing that. And if you're looking at an explorer, for example, they have to have those similar talents, but they also have to have access to really great technical resources, because on the exploration side, that's really a big, key factor. When you look at grades, it's amazing how so many companies masquerade as silver companies when really they're base metals companies. That's something I think that viewers need to really look at very carefully. You have so many companies that when they give you when they report their silver grades in exploration or in their reserves or their resources, they'll talk about silver equivalent. Well, what they do is they take other metals, could be gold, copper, lead, or zinc, and they convert those into at a certain exchange to silver. But really, in many cases, it's mostly other metals. You could be as much as 80% of other metals, and you're really 20% silver. To me, that's not a silver project or company anymore. And so one of the things I look for is if it's an explorer, obviously if it's very, very early, I have to give it some leeway because you don't know what if they don't actually have a resource or so yet. If it's an explorer, you have to at least have the expectation that it's going to be high in silver content. But if it's a company that already has a resource, I look for at least 40% silver by content. And if it's a producer or if it's a developer, I'm looking for at least 40% revenues ultimately of silver by content. And then the last one is jurisdiction. And so, people will say, well, lots of places will talk tough, and ultimately they know they have to back down. You can think of all kinds of places, especially in Latin America. But the problem is that even if ultimately those leaders or the people, making these statements that are challenging to the mining industry, and they do ultimately back down, in the meantime, it hurts share prices. And that's something that you have to deal with. And so for that reason, I'm really quite picky when it comes to jurisdiction. That, of course, absolutely will limit the kinds of places that I'm going to look at of where some of these silver deposits or silver projects are located. It's a weighing game. You have to decide what you're most comfortable with, but that's certainly at least one of my main filters.
So how do you feel about investing in an ETF that tracks the price of silver? You've got SLV, which is kind of the most well-known one. And then could you contrast that with PSLV? Because I think some people new to the space get a little confused between those two. Could you explain the difference?
Sure. So SLV, as you say, is in fact, it's the largest one. It's the first one. It was set up in 2006, and I'm not sure if that's still the case today, but it has been at least one of the most traded commodities ETFs ever. So it gets a lot of traction. But the problem with SLV, my understanding is that it's you don't have a clear path to your silver, and you cannot redeem for physical silver. It needs to be said, though, that a lot or most of the ETFs that do have that option, the barrier is high. So you're looking at, in many cases, multiple hundreds of thousands of dollars of value of silver if you want to take physical delivery. So for some industrial players or for some institutional players, that's not an issue. But for retail players, that certainly can be an issue. And so the reason I like PSLV, so PSLV is a silver ETF that's run by Sprott. Sprott has a tremendous reputation in the resource industry, managing funds across the commodities space. And the silver is actually held by the Royal Canadian Mint. So you again, in that case, it's not that different in terms of the requirements for if you want to take physical delivery. I don't remember the numbers, but they are in the couple $100,000 probably at least. So that again, that barrier is very high. But given who's managing it, given how and where the silver is actually held, and an important point, the fact that this silver cannot be leased out, what's in the ETF is held exclusively for those trust units and for no other purpose. So it's a lot safer based on how it's built.
So I want to touch on the silver squeeze movement now, which you also write about in the book. And I work at an investor relations firm. And at that time, when I was still in Vancouver, everyone in the office was swept up. We were all buying silver and comparing the silver we bought and, following Reddit and everything going on online. And ultimately, the rush of retail investment into the silver space did seem to move the needle. but just not as much as many people expected and not for such a prolonged amount of time. So I guess the question is, how much power do retail investors, silver stackers, really have over the price? And was this movement a failure or a success in your eyes?
So I think that they do have a fair bit of influence because uh, they're what we call stackers, right? So and this is one of the things that I talk about actually in the book is I coined the term silver is sticky money. And what I mean by that is if you look at one of the biggest places that silver gets accumulated is in silver ETFs, which we just talked about. And it's interesting that you look at a chart going back to 2006 or so when this first silver ETF was established until today, and you have the price of silver overlaid on that on the silver accumulation in silver ETFs globally. And anytime when I was doing the research and sort of studied that chart, what really struck me was that you had periods, of course, when silver, which is volatile, had big drawdowns in the price. I mean, big drawdowns. And I noticed that what didn't happen was that the silver accumulated, the holdings of silver globally in silver ETFs would perhaps drop, but nowhere near the same percentage. It was very muted. And in fact, in many cases, the silver holdings in those ETFs just moved sideways. In fact, so it was really impressive to me to see how you could have huge drawdowns in silver and the silver price, and yet the holdings of silver hardly would budge. So, I transfer that over to stackers, and these are very stubborn people. They buy silver, they sit on it, they have no intention of selling it. And so this is all silver that comes off of the market. There were something like 330 million ounces of silver that went into investment demand alone in 2020. It was just way off the charts. The numbers were quite high again last year, top of my mind. I can't remember exactly. I know that they were very high. And so this is silver for the most part that really comes off of the market. So the silver squeeze event was really, it was a milestone, I think, in some ways. You could argue, some will argue, I think, that it wasn't effective or it wasn't a success. If you look at what happened with the silver price, I think it's a bit of a mixed bag. It was successful in that it really got the silver price to move. If I remember right, it went from somewhere around 25 to 29 in a matter of a few days. You had silver miners and silver explorers. Their shares just exploded. Trading volumes were up 6 or 7 times. You had share prices up like 50% in a matter of days. And so, and if you look at what happened with the silver bullion dealers, it was wild. Most of them said they had never experienced anything like that. So this would have been on like a Thursday or something. I remember it was late January, and that weekend, a bunch of the silver bullion dealers, were swamped with calls. People were calling in, trying to buy online. Many of them were having to shut down because their phone systems, their websites were crashing. They had to refuse sales. They were completely sold out. And, deliveries went from 2 to 3 days to 2 to 3 weeks. Premiums absolutely exploded they were already high, frankly, from early 2020 till this was in around late January 2021. So premiums were still high, but they in some cases they actually doubled from maybe 30% to 50 or 60 or 70%. And what was really interesting was that, and I've read reports, and I have some of that some of that info in the book, is that in hindsight, when people looked at what happened, that the vast majority of the buying was small quantities. So that meant that was really mostly retail coming into the space. And so I had started my newsletter. Actually, that was the first month of a Silver Stock Investor, had just started the newsletter. And so it was a great time to be there and to look at this and react and provide info on it. And I remember telling readers that, you need to kind of step back, and the excitement is fantastic, but this is not a fundamental driver for the silver price. This is a sentiment driver, I think. And so do not necessarily expect this to last. And over the next sort of weeks and months, it kind of died down. Silver gained back a lot of those gains. The volumes in trading of silver miners also went kind of back to normal. But I think what it did was it exposed a bunch of much younger investors to the whole silver space, this was the birth of things like Wall Street Silver, on Reddit, on YouTube, on Twitter. A lot of social media coverage, took place, and as I say, it exposed the entire investment sector to a much younger and brand new investment group. And so these are people that never looked at, were never perhaps interested in silver, and now have become silver investors and are closely following the space. So I think that it's really changed the landscape for silver investing. In many ways, I'd say on balance, it was a success. And given what's been happening. This is something that has yet to finish playing out. But if you look at what's happening in both the COMEX in New York and the London Bullion Metals Association, so the London metals stocks, they've been coming down dramatically in the last sort of year or so. They're down about 20%. The holdings in those vaults, and so someone is taking delivery of that physical silver. It's going to be really interesting to see if a new silver squeeze starts to play out, perhaps in the next few months. Again, I said at the outset that silver is massively undervalued, and so and it's so crucial to industry. So it's very possible we'll see some sort of repeat. It may not be the same way, but I certainly wouldn't count out some sort of a similar reaction sometime again in the near term.
That's a great overall assessment of that event. Perhaps still having effects that are rippling today. Like you noted, new people who weren't investing previously, maybe they weren't investing at all. They didn't know about sound money, right? And so I think silver is a great introduction to that. So are there any other commodities at the moment that you're bullish on besides silver? And if so, why?
So I would have to say that in the nearest term, uranium would have to be the commodity I'm most bullish on.
Oh, we like to hear that on this show. My audience is going to like that.
Absolutely. So, for probably many reasons they've heard before, I think that, and what's interesting is you can compare it to silver, and I think that uranium is also massively underpriced and underrated in terms of its potential. Of course, since Fukushima, the disaster in 2011, it's turned a lot of people off to nuclear and to uranium. But a lot of groups, governments, and NGOs, environmental groups are really coming around and realizing that if we're going to make this shift to a greener future, to greener energy, clean energy, and so on, uranium and nuclear absolutely has to have a role in there. It's a baseload power, and at current prices, the producers are not making any money. It certainly has been low for a while, but it has nearly doubled from its ultimate lows, going back about a year and a half, couple of years. And so it's already seen a big move. But I think that there's much higher prices ahead in uranium. And I think that the explorers and the producers will benefit tremendously from that. Other than uranium, I like copper as well, again, for this green transition. I think that, the whole green transition, it offers a lot of promise, but I think that we're moving into it so quickly that it's been underestimated in terms of the ability to supply electricity, to charge electric vehicles, for example. There's going to be so much demand on the electrical grid, and copper is such a huge part of that, both in the technology, in the grids, and so on. It's really going to become, I'm not the hugest fan of Goldman Sachs, for example, but I would have to agree that copper is going to become the new oil as we move into this into the greener future. Absolutely.
Well, Peter, thank you so much for joining us. I'm going to plug your book one more time, The Great Silver Bull. I'm going to put a link in the description. This is not an affiliate link. I'm not getting anything from it, but I want to make sure people can get a hold of it because I think it's a great book for people who are both experienced and understand silver, and it's also a very good book for people who are new to the space and maybe curious about it because you take a lot of complex subjects and you break them down, so that's great. So besides the book, when anybody wants to hear more from you, where can they find you online?
So as I mentioned, I write an investment newsletter that is focused exclusively on silver called Silver Stock Investor. So viewers can go to silverstockinvestor.com and find out more there. It's really meant for people who are of all levels of and comfort, I guess, in the silver space. Because I cover everything from physical silver all the way to junior explorers and everything in between, large producers, royalty companies, and so on. So there really is something for everyone in terms of risk tolerance in that service. And then I'm also on Twitter, Peter_Krauth, and you can find me on LinkedIn as well. So I'm easy to find.
Okay, great. I'll put links to those in the description as well below. Awesome having you on and hope to continue the conversation in the future.
I look forward to it as well and had a great time. Thanks so much, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.